Welcome. So today, our conversation is going to focus on how investors are really waking up to the power of women. I know you just heard about how businesses are. So we want to start with a polling question, just to kickstart this. What percentage of the global wealth is held by women today? And I think hopefully you've all already gone through this, but it's on your Bloomberg app. Oh, yes, okay, I'm seeing it's coming up. Watching it in, 25% seems to be popular. Right. I'm told to give it about a minute before we make any judgment calls. All right, so this is interesting. So about half of you would say it's about 25%. The good news is it's 30%, so that's exciting. And in the U.S., it's more than women hold more wealth than men for the first time in U.S. history. But globally, it's about 30% and expected to be 50% by 2025. So this is an important conversation. So with that, Martina, I really wanted to start with you, just to set the stage a little bit about what does this mean for economies globally, and what does it mean as women as investors and their influence in that?
Yeah, thanks. I'm so excited to be here. I would maybe highlight 2 points around the importance of women from an economic empowerment and an investment standpoint. From an economic empowerment standpoint, we've done a lot of research that has highlighted, and I think I heard a little bit earlier this morning as well in some of the conversations, the economic impact that women can have when we have greater female labor force participation. The numbers are staggering to the extent that you have best practices spread around the globe more equally than it is right now. So that's, on the one hand, we see a tremendous opportunity for GDP growth, wealth creation. On the other hand, we see the emergence and increasing importance of women as investors and their influence as investors. Our estimate is that women could hold as much as 72 trillion in investable wealth by 2020, and what that means is that women's investment interests are becoming more and more important. And so a lot of the topics of conversation today have been around ESG. We, in our surveys, have highlighted ESG as one of the most important themes for women investors, and so certainly that's something that's got to be top of mind for companies as they're thinking about meeting that interest. The other thing is, there's a tremendous amount of opportunity to increase the penetration of investment among women who actually are holding this wealth. Even though women have more wealth, not enough of them are investing. And so making it more accessible, I think, is going to be very important also.
That's interesting that less are all investing. Ida, I want to turn to you. I mean, you talk to some of the wealthiest people in the world. I've heard before that sometimes women, when their husbands die, are apt to switch financial advisors. And I know that one of the reasons women have accumulated more wealth is both their own earning power, but also because they inherit wealth. Is that true?
It absolutely is true. Interestingly, women tend to outlive their male counterparts by an average of 15 years. And when they do become widowed, 80% of them change advisors.
80%?
80%.
Wow.
So why is that? Why do 80% of widowed women change advisors? The number one reason is because they feel that they didn't get the same level of attention as their spouses did. So how many times have you been in a meeting where you've seen an advisor speak only to the patriarch and not to the matriarch, even though the wealth is evenly distributed? So that was the number one reason. I, interestingly, had met with a female client the other week, and she was saying to me the most important thing for her in making an advisor decision is that there is a diverse base to select from. They want to be able to see that they can choose from advisors that are men and women and of different ethnic backgrounds. And she also complimented me in that she felt that our team resembled the United Nations, which I was very proud of. We have 50% women on our team, 40% ethnic diversity, and clients, both male and female, appreciate the diversity. It's not about gender per se, even though that's an important factor. It's about diversity.
So women don't necessarily prefer a female financial advisor. It's not that they have to be. It's the diverse team.
It is. It's about the diverse team.
So Sharon, in light of what we just heard, and women are controlling more wealth and that's being invested, why then are women still getting the short end of the stick when it comes to access to credit or venture capital?
Well, Kiersten, I really wish we had the short end of the stick, but frankly, we just have the tip of the stick. As you know, I guess in 2017, a study indicated that $2.2 billion had been invested in gender lens investing. And I thought that was a good reason to celebrate. But as you just mentioned, that's really a paltry number when you consider that, compare that to the $72 trillion of global wealth that women will be controlling by the year 2020. And we all know that only 2% of VC funds and 4% of bank loans go to women-owned businesses. And as we spoke about, this drives me crazy. Women have our monies in your bank accounts, they're in your retirement accounts, they're in your private equity funds, yet we can't use our own money to lend to women. That really drives me crazy. We also know that there's also a leadership gap in finance, with only 2% of global bank CEOs being women and less than 20% of global bank CEOs being women. So that needs to change. But as you know, I am an optimist, and so I do think we can change this paradigm. And I think we can do so in three important ways. One, I think we need to define what we mean by gender lens investing. Second, I think we need to measure it. And I think the Bloomberg Gender Equality Index is a great example of that. And the third thing is I think we all need to be intentional. We know that a significant percentage of investors consider non-financial data to be important to their investing decisions and in their voting decisions. But companies shouldn't just think about investors. Their employees also care, as well as their board of directors, as well as their consumers. So we all really need to be intentional, and I've been thinking about this quite a bit. And as you know, I've been working with Seneca Women, and we created an app called Seneca Connect, which we hope will help to advance women and girls in the economy. This app is free. You can download it in the App Store. And we hope that also companies would look at our enterprise versions, where we're going to help companies create a much more diverse and inclusive environment where employees can come and bring their best selves to work. So I'm excited about it.
I'm excited about your app as well. Couldn't agree more. To touch on something that you just said, Ida, tell us, what does a gender lens strategy look like in a portfolio?
Sure. So my colleague just mentioned that $2.2 billion is deployed in gender lens investing today. If you include both private and public side, which I'll explain in just a moment, it's about $4.4 billion. It is still small, but what's important to note is that that number has doubled over the last year, so it's gaining a lot of momentum. So some things that we're hearing from our investors on a daily basis is, look, we want to do good. We like social impact investing. Some clients are particularly focused on gender lens investing. And you don't have to give up any sort of return to do good. I think that's the key here. A lot of people say, does this mean I'm going to compromise returns? Actually, no. You can outperform. There's alpha generation in having diversity and gender lens investing as well. So we look at it in two different ways for our clients. We look at it in the public side, where we look at companies that exhibit great gender diversity initiatives through the Bloomberg Gender Equality Index, which we're very proud to be a member of for the last 4 years, through different measures of how many females they have on the board and in management teams. And then on the private side, we invest in women's startups. We do microfinance loans. We help small business owners. And we also invest in companies that help the progress of women and girls, education, healthcare. So it's really looking at it public, private, and customizing that for our clients' portfolios.
So it's both to generate returns and also have this positive impact on women and girls at the same time.
And you don't
That's
have to
great.
compromise. It's a win-win.
That's great. Martina, you lead ESG investments for S&P Global. How satisfied are you with the access to ESG data that you have? And gender data specifically, where does that fall on the spectrum compared to some of the other ESG data?
Yeah, we have been looking at this thematically from a materiality lens. So looking at the different factors from an ESG standpoint and their materiality by subsector, and in some cases, within smaller groups of companies or peer groups. What we find, so just at its highest most level, about 85% of the S&P 500 are publishing sustainability reports. But only about 50% of them are actually sharing as much gender diversity metrics as we would love to see, in terms of being able to collect that data and present it for analysis. And so, I think the gender reporting element is falling a little bit behind the broader ESG piece. Climate has always taken precedence, I think, in that. But having said that, we've come up with, and I'm sure Bloomberg's done the same thing, many ways to be able to actually derive those measures ourselves, whether it's using salutations and for people-related information that we collect, and we have a lot of other ways that we can do that also. I think the greater challenge, to the extent that you want to look quite broadly and maybe not within a kind of a narrow, let's say you have a very broad portfolio across multiple sectors, is to find something that is actually consistent. And so you've got the gender pay gap legislation in the EU, in the UK, for example. You don't find that same specific legislation in every geography you might be interested in looking at. And so it's the consistency and the availability of consistent metrics that can be a little bit challenging on that. And so a focus for us is, how can we actually, if we don't get it publicly, derive it by using text analytics, machine learning, and things like that, and then put it together. And I know you guys have done some great work for the Bloomberg Gender Equality Index also, which we are also a proud member of.
Yes.
No, that's a great point. I mean, and the reason we built it was to help companies have a standardized way to disclose this data so that it makes it easier for investors like yourself to collect. I mean, what do you see as a market catalyst or the influence that could really accelerate the access to the standardized data that you're looking for?
It's probably both internal and external, I would say. From an external standpoint, interest from investors in getting access to this data for the purpose of gender lens investing, for the purpose of, it could even be for counterparty analysis purposes. I think there's plenty of that. It's both private sector led, public sector led, but I think there's also recognition, not just from investors, that companies who manage their ESG factors well, perform well, but there's, I think, an increased recognition by management teams that you're not just doing this to satisfy an expectation that you will report it, but that you actually see the value in it yourself. You see the value in having 50% of women on your private banking team, for example, and that is reflected in the results that you can generate and in your overall employee and customer engagement. I think that's very widely acknowledged, and there are plenty of metrics to demonstrate that.
Sharon, I want to talk a little bit about the role of stock exchanges here and that they can play. I know there are, I think, 42 exchanges now globally that have some sort of ESG guidelines and a smaller subset of those that are making them mandatory reporting requirements for listed companies. You sit on the board of the New York Stock Exchange. What's your view here? What do you think about that?
Well, let me just first point out that we are big supporters of ESG disclosure. We're signatory members of the Sustainable Stock Index Initiative, as well as the World Federation of Exchanges, where we encourage our public companies to include ESG metrics in terms of their performance. But you're correct. We don't mandate ESG metrics as a listing requirement. And that's because of a few reasons. Number one, it becomes somewhat of a slippery slope to pick one metric over the other. And frankly, we think there's a lot of data that's already out there, with 93% of the 250 largest public companies already publishing corporate responsibility reports. Mm-hmm. We also think, frankly, that it behooves all of us to look at this data. And so we do provide the resources on our website. You can go to it and you'll see frameworks and guidelines in that respect. As a public company, we also have our own report, and I'm proud to say that on our board, we are 30% women on our board. or 30% women on our senior management team, including having women presidents of our New York Stock Exchange, ICE Data Services, and ICE Clear US. So we really are walking the talk. We also just recently announced the formation of an advisory council where we will be working with CEOs to help them broaden the network of the next generation of board members. And I'm really excited about that. And then obviously we're always open to suggestions from any of you, so please feel free to give me a call.
Well, I imagine it's a hard balance for, exchanges have this powerful role.
Yes.
But when I think of, for example, in Norway, when they instituted quotas of 40% women on boards as a listing requirement, you saw some companies delist, which clearly was not the desired consequence there. So it's probably finding a balance between encouraging, we still want listed companies, we want that transparency that you don't get from private companies, but you also want them to behave responsibly.
Absolutely. And as you know, it's being part of the financial markets, transparency is everything. And you're right, we want more companies to be listed, and we know there's been a decline in companies going public, over the generations. And so anything that increases the cost, we have to balance that with the disclosure that we think is out there.
I think you made an interesting point around a lot of companies are doing their own CSR reports and including a lot of this data, and they have access to better standardized frameworks like ours for gender or SASB and others. Ida, I have to say, I just used Citi as an example in a breakfast that I hosted this morning of a company that around pay, I think really demonstrates true transparency. And Citi, for those in the audience that don't know, was the first major US bank to release not only just their raw pay gap numbers, but also their equal pay gap numbers globally for both gender and then also for ethnicity. And I believe it was the week of Davos,
Yes,
and we
it
were
was.
there. And I
Yes.
remember we had this conversation of there was a lot of heat around the numbers, aren't all great. And I sometimes get frustrated because I think true transparency is reporting the numbers that you're proud of, but also the numbers that you recognize you have work to do. And I think it's fair to say all companies have work to do on pay, but we don't even really know how much. I would just love to know kind of your view and all of you as public companies. How do you struggle with those types of decisions around the risk to report versus maybe the risk to be less transparent in the current environment?
Kiersten, it's a have to do. It is, we are firm believers that what gets measured gets done. And so despite the fact that our numbers were not fantastic on the pay gap side, we've made a commitment to put those numbers out there and to improve those numbers over the next few years. We're very proud of the leadership that Mike Corbett has taken Citi in the direction of promotion of diversity. We do have 50% females in our entire employee base around the world, 40% women on our board, which is, I think, very remarkable. And we are doing many things to advance that, right? But on the topic of gender lens investing, despite all of the momentum and the increased funds that are going into gender lens investing, the World Economic Forum just came out with a report on gender gap that it's going to take 200 years to reach gender equality. That is shocking, 200 years. And what are we leaving on the table? If we had gender equality today, our world would increase the GDP by 28 trillion over the next 5 years. So we're leaving a lot on the table, and it's up to all of us to make sure that we are presenting, educating, understanding the implications of these types of ESG and social impact investing. And there's plenty of information to provide that transparency. Bloomberg has an ESG function where you can see the ESG statistics for the companies that you invest in.
A lot of great plugs for Bloomberg, guys. Thank you. So actually, I know we're almost out of time, so I kind of want to wrap this with asking all of you the same question. But now that we've set the stage a little bit about supply and demand and what gender lens investing is, if you're someone in the audience who's suddenly saying, I know I am thinking, am I asking the right questions of my own financial advisor? Is my money still being just lent out to old white men? Or young white men, entrepreneurs. What should we be asking? What should we be thinking about?
Let's do it first.
Anyone?
Can I go in order?
I think we're asking all the right questions, and I think we need to continue to ask all of the right questions. And when I think about the future, I'm really reminded of a quote by Mae Jemison, who was the first African-American woman to travel into space. And she said, the future didn't just happen, it was created. And so I am optimistic that we can harness all of our collective power to create the future that we really want to see.
Yeah. That's incredibly inspiring. I'll be a little bit more sort of blocking and tackling. I would specifically ask, do you treat ESG as a separate theme, or are ESG factors across your entire investment portfolio, regardless of what it is? Because I think it's only until we expect it as a baseline in any investment decision and not treat it as something, kind of a niche investment strategy, I think that's when we're going to get, both sides of the equation working together.
And I think that understanding the implications of ESG and that it can generate alpha is key. It's critical. I think one of the biggest hesitations amongst many investors is, what do I have to trade off to do this?
Yeah.
And that's just not the case. So correcting that myth is crucial.
Right, and hopefully it will just become, rather than a niche or a misunderstanding, it'll just be good investing, as so many other factors are. Well, I want to thank you all for joining me for this discussion, or joining us. And I also want to point out that I have to say, props to us, because we've got an all-female panel, and we have a diverse panel too. So I have to say, this doesn't happen to me often, that I feel like we've got this great representation up here. So thank you, and thank you for all that you're doing in your respective fields.
Thank you, Kiersten. Thank you.